But first, U.S. stocks plummeted Wednesday after disappointing quarterly results from the nation's largest retailers. The Dow dropped nearly 1,200 points, or more than 3.5%. The tech-heavy Nasdaq fell over 4.7%, and the S&P 500 slid more than 4% in its worst day since June of 2020. Ed O'Keefe has more from the White House.
It was the biggest one-day point drop in 2 years on Wall Street as the nation's top retailers warn price spikes are affecting their bottom line. Target announced a 52% drop in profits last quarter, blaming the growing costs of gas and transportation. Its stock lost a quarter of its value. Other retailers took double-digit hits following Walmart's stock performance yesterday, the worst in more than 30 years. The global economic slowdown caused by COVID-related factory closures in China and the war in Ukraine has led to record gas prices and a worldwide food shortage, since Ukraine's grain can't be shipped out.
Everyone's struggling with the gas prices. The prices of food have gone up.
Treasury Secretary Janet Yellen says it's the cost of trying to stop Vladimir Putin.
There would be spillover effects, and that we are prepared to pay.
President Biden had hoped that the Federal Reserve could raise interest rates to ease inflation. But Chairman Jerome Powell now warns that might not do it.
Whether we can execute a soft landing or not, it may actually depend on factors that we don't control.
It all presents yet another big challenge for the president and his party, hoping to retain control in the fall's midterm elections. The White House today tried to brush off the stock market plunge.
That's not something that we keep an eye on every day.
Now, the White House may say it doesn't track the ups and downs of the stock market, but polls consistently show a majority of Americans disapprove of how the president's handling inflation. One way he's now planning to tackle it by announcing new economic partnerships with Asian nations and plans to streamline supply chain concerns when he visits South Korea and Japan, starting later this week. Elaine?
Ed O'Keefe, thank you. For more, I want to bring in Wall Street Journal reporter Akane Otani. Akane, welcome. So for the past few weeks, tech stocks have been linked to market volatility. But as we saw Wednesday, retail stocks took a hit. So what can we expect from the market as prices continue to rise?
Well, we're seeing a lot of anxiety among investors about how different parts of the economy are going to hold up as we keep seeing inflation rise and the Fed tightening financial conditions. The reason retail stocks took such a big hit was because I think a lot of investors have had high expectations that consumer spending would continue to help businesses like Walmart and Target continue to produce great earnings. But what we're seeing is that even these big dominant businesses are suffering the effects of inflation, of higher costs for labor, higher costs for commodities, higher costs for importing the goods, and that is having an effect on their bottom line. So we saw sort of a contagion effect, a lot of different retailer stocks really performing poorly today. And I think what we'll see in the next couple of days is we'll keep seeing investors really parsing these earnings reports to see, is it spreading beyond one or two industries? And are we seeing this inflationary effect really start to hurt more and more companies?
You know, a lot of Americans as well are looking at 401ks. How is this all impacting Americans' retirement funds, and how can people protect their 401ks?
Well, it's certainly been a very rough year for any investor, retirement savers included. Obviously, most retirement savers are heavily invested in index tracking funds. And so typically, people in those types of funds will probably be down double-digit percentages for the year. And it's really shocking, especially given how well the markets had done the last several years before that. But what financial advisors always tell us is that it's incredibly important not to make any rash decisions at this point. I mean, the stock market goes up and then it also goes down, and you'll have some good years like the last several years, and then you'll have some incredibly bad years, and this year might be one of those. And so what we often hear people say is that it's important to just stick to the long-term goals. For most people, that means not actually making any changes to their portfolios and to sort of ride out the market volatility instead of trying to time when the bottom of the sell-off is going to be.
Certainly alarming to see that volatility, though. Akane Otani, thank you very much.
Thanks.